We are live.
I made it. I had to like sprint back. Long story short, I was trapped out there. My last call overran, and I was out in the sun. And here I am, though. I made it.
Yeah, the lighting looks pretty dark where you are.
No, it's sunny in Miami. Actually, I don't know. I have no lights on, but there's the ocean over there. Anyway, what's good? How are you, Mike? Good to see you. I don't know what episode this is. Episode 105, sponsored by YEET and Rekt Drinks. We had to come up with our own sponsors. We're doing well. Now we have two. It's a beautiful thing going from 0 to 2, especially when you own both companies. But what's up, dudes? How are you?
Doing great.
I'm good.
Big day for OSF today. And then for me.
What is it? Abstract launch? Oh, did I?
Yeah, it's the launch of Abstract Apple. Did you get yours in the NKBM or no?
I got them. I got both flavors, Abstract Apple and original liquidated lime.
Do you like them?
Liquidated lime?
I haven't heard you say a word.
Huh?
I haven't heard you say a word about them. So do you like them? Or
I
no?
like the liquidated lime. Actually, my friend's kid has been like, he comes over. When my buddy comes over, his son comes over and just begs for these Rekt drinks, like the liquidated lime one, especially. So there you go. Maybe kids are your target market. Kids are trying to get Rekt, OSF.
Something to think about. Great market. Yeah, let's get all these young kids to buy Rekt. Got gamble to buy a Rekt coin. I think it's
yeah. Straight put them to eat then. Just
gamble as well. Anyway, that is launches in like 2 hours, right? So hopefully that does sell out. I do think
in 2 hours,
US, it will sell out quick, right? But Europe, maybe a little bit slower.
Yeah.
But yeah, we've got that, and then today we have Mike Dudas on. Kind of varied history. I kind of knew you first as like more of a shit poster almost when you were more. I think maybe you were at the block at the time, or you just moved on, but like you were definitely well known for that. But then you've also you have your own venture or VC firm, been very, very successful, caught a lot of very successful crypto firms early. So it's great to have you on. I know you've been speaking to OSF about coming on for a while.
Appreciate it. Yeah, thanks for having me. Basically, sort of transitioned from being a shit posting, traditional technical founder to shit posting head of a media company to a shit posting, NFT golf project leader, and now shit posting VC. And it's working. The audience is still growing, and half the people self-select out and think I'm an idiot, and the other half are interested.
Well, what I liked about how you posted, you tell the truth a lot. Like you were actually one of the few more like people who had a bit more of a not corporate role, but like a professional role, but like just didn't care just to call people out directly on the timeline. And you've been known for calling out a lot of the scams very early on, and then it all comes out later. And
it's an expensive habit, but I think in the long run, it's really important, and hopefully helps and protects some people from getting wrecked. The big one I think was Celsius, where I heard from a number of people, who pulled their money out of Celsius in kind of 24 to 48 hours between when I said, hey, this thing's going to blow up, and when it actually did.
He denied it, right? I seem to.
He denied it it was one of these famous tweets, like where he responds and he's like, "Do you have something against me, or are you working for the competition?" publicly, and the thing blows up, literally 48 hours later. And it's interesting. It'll be interesting to see what happens. I don't really root for anybody to spend a really long time in jail, but it looks like in Mashinsky's case, the prosecutors are recommending like 20 years, and he's arguing for 1. It'll be interesting. He's not really showing remorse, like a lot of these crypto founders whose things blow up. So we'll see, what the judge says.
Do you think in those cases these guys are just like completely deluded or have no idea? Like, do they just like fundamentally don't understand numbers?
So I think it's less not understanding numbers and more that like crypto. You guys, I'm sure, experience this as well, and listeners as well. The number of narcissistic sociopaths that we have in this industry, the incidence is like, I feel like an order of magnitude higher than in traditional business. I mean, I don't have the data to back it up, but like the number of implosions and scams probably is good enough data. Even just yesterday, like we had a project founder of a project Cerebro that went to 800 million, like literally faking his suicide and faking his death, to sort of exit and pump and attract attention to a new shitcoin. So people just tend to do really insane things and I don't think see sort of the wrong in it, and FTX and SBF obviously had sort of a godlike complex, and I think many people, he might have been right that he's like, hey, if I could just like fake the fraud, fake it and get to the other side in 12 months, this is going to be one of the biggest companies in history. And frankly, based on his AI investing portfolio, he might have been right, but unfortunately, he was doing it the wrong way with customer funds, and it was a massive fraud.
Yeah, part of me thinks that we're onboarding a lot of people at the moment, or at least a lot of traditional finance is being onboarded, but they probably just don't understand like how crazy it is sometimes here. It's like a reflection of society without any rules at times. Like that Zero Bro thing yesterday, where a dev has faked his own death, sold coins during the faked death, and then done the mental gymnastics that it's okay to like come back to the space. And I'm telling you, if he launched a coin today or tomorrow, people might buy it as like another gamble in the space. It's like,
I mean, somebody launched, I kind of hate to say that I chuckled a little bit, but somebody a few hours later, the name of his project was Zerebro, and somebody launched a coin called Still Here Bro, and that thing like traded up for God knows what, like $1 million. I mean, I'm laughing. But it is sad. There's some insanity necessary to kind of be in the trenches and be trading these things and interacting with folks in this industry, an ecosystem for 24 hours a day, 7 days a week, year in and year out. But I'm confident that like something is brewing here that the rest of society will see and take away and enjoy, sort of the, call it tokenization of attention, and these like groups of people who do communal things together in the same way that not quite the same way, sorry, but I think there's somewhat of an analogy to early Bitcoiners who were looked at as crazy by people. They go to Bitcoin meetups. Most people would be like, oh, that's a joke. Look at these silly kids. The early use cases were, around things like, drugs and illicit marketplaces. But in a relatively short period of time, given how money tends to evolve, it typically takes decades or centuries. Pretty remarkable that, Bitcoin now is something on company balance sheets, that sovereign governments are holding it, and it's sort of established itself as a multi-trillion-dollar asset that probably will be larger than gold over time. So, I think we look at the crazy behavior, and it sows the seeds that sort of the mainstream gets attracted to over a period of 3, 5, 10 years. And we saw that again with NFTs. Like it looks silly in hindsight, like apes going for $1 million plus, but there was probably something there in terms of the communities that were created, the collectibles, the brands, and just the energy of people around a common shared interest.
So how did you first get into all this? Was it journalism, or was it investment? Like, how did you find your way into crypto?
Crypto. So 2017. So basically, I come from like a traditional tech background. Like spent a decade started my career at Disney. Ended the first decade of my career at YouTube. I'm a boomer. Like I'm in my mid 40s. And then the second decade of my career was in fintech. So I was at Google Wallet, and then Braintree Venmo, which is actually where I discovered Bitcoin. And then Venmo sold to PayPal. So while I was at PayPal, we were talking to Coinbase about maybe having Bitcoin as a method of payment acceptance. It didn't work for a bunch of reasons, and it was way ahead of its time. But I got into crypto via an interest in these like permissionless global money networks, payment networks to compete with MasterCard and Visa, self-custody wallets to compete with banks. And what's exciting is you're really starting to see that stuff come to life today. But in terms of like what I practically did, so I'm not an engineer. I'm really good, as you said, at the start, at sort of like shit posting and attention, and I taking complex ideas and hopefully explaining it, to a broader group of people. So when I wanted to enter the space, I founded a company prior to jumping into crypto that did really well. I was trying to figure out what the heck do I start here? Like I'm not an investor, I'm not an engineer, so I can't go build a protocol, because at the time everybody was just building ICOs in 2017, 18, building highly technical protocols. So I said, okay, every person I talk to, if I ask 10 people the same question, I get 8 or 9 different answers. And why don't I start at the block, median research, sort of accessible to anybody, to hopefully explain crypto in a more, in a much more straightforward way. That went well. And then put behind that a lot of personality. So I have a lot of personality. Frank Chaparro was sort of our lead journalist, had a lot of personality. Larry Cermak, the lead researcher, and we were feisty and having fun, and putting out good information, arguing with a lot of the industry titans. But obviously, if you're in a money industry, which this is, you'd much rather be in the money flow not the information flow. It's just a lot more lucrative. And so I, sold that company in 2021 and full-time went into VC.
That was a long resume. You've been around the block quite a bit.
Yes,
sounds like you did a little bit of everything there.
It's been wild, yeah, and fun.
What's interesting to you the most about being a VC? Like, how's that different?
Yeah.
Like, what's that different from a normal 9 to 5? I don't know.
Yeah, so I think if you look at VCs in crypto, there's a higher incidence. Although I think in traditional VC you're seeing more of it now, but in crypto, usually it's like people who have been using the chains, who've been on chain, who are practitioners, who have maybe started companies, who've used DeFi and done things like built protocols. Robert Lesher, Robot Ventures. Like there's just most VCs. Chris Dixon, A16Z have been founders, and so the long and the short of it is, I think one. You in crypto and in VC, you're more hands-on and more of a company builder than you are in traditional VC. It's not just like a board meeting every 3 months and then we kind of tune out and maybe we send some emails here and there. The other thing is, so I like VC though quite a bit more than building a single company at a time, and it's mainly because I have like the attention span of a housefly, right? Like and I would be over exaggerating a little bit, but I like to be working on 10 or 12 work streams at a given time. Versus one. The other thing is VC is really good for people who, again, have, I think, high throughput, can context switch a lot, but I'm not a great manager. So like I wasn't great at like building organizations as they would get bigger and I'd have 50 people in the organization or 100 people. I can lead. I'm like a leader and get people to follow me, like start a community like Linkstad, the golf NFT project, but not a good manager. So VC is great because it's a partnership. Nobody reports to anybody else, and we sort of collectively come to decisions. So I get to do a lot of different things, collectively come to decisions, and have been an operator and like I'm really specialized and know a lot about crypto from being in the space and being interested in Bitcoin. Bought my first Bitcoin in 2013. Have domain expertise. What's interesting is I don't know how long that advantage will last. As the asset class grows, as it becomes more financialized, as it feels like we have a transition. There's kind of a transition more towards like institutionalized usage of blockchains and corporate usage of blockchains. It'll be interesting to see what that means for VC in the long run.
I think one of your guys' early wins, or something that I think you were really right on at a good stage, was Solana and the whole Solana ecosystem. Obviously, I think you guys were involved from the beginning, and then, even after its first death, if you like, I, kind of like vividly remember you Bill posting about it, maybe when other people had just forgotten about it or lost hope. And it sounds like you've had a lot of good investments within the Solana ecosystem in addition to Solana itself. So just curious, like, how did you like come across Solana as a whole? Like, what specifically about it got you guys bullish? And then after we had the whole FTX crash, what kind of gave you the confidence to double down on it? Or was it just kind of like, we've got no choice now, we have to double down anyway? But like,
yeah, good question. So the light bulb moments were, so basically it's obvious that most of the things that exist on Solana existed in some form prior on Ethereum, most of them, right? Ethereum's been around longer. It's where the users and the money was, prior to 2021, like before Solana existed. But what happened is, so I started out like I was Bitcoin maxi when I was around the block, and then Ethereum was just eye-opening to finally start using it. When NFTs started coming out, and you had NFT gaming, and things like Steppen, which are on Solana, we can get to, horse racing like Zed Run and Photo Finish, some really fun NFT and liquid token things. But what was clear was that like Ethereum is too expensive. Like, when the other side, Yuga Labs launch happened and it cost $2,000 or something in gas fees to purchase an NFT for $2,000 or something like that, it was clear that like that network and that user experience wasn't working. And you were seeing signs of that before, like when CryptoKitties usage spiked up many years ago, Ethereum got really expensive. So what we noticed is in that 2021 period, many of the best folks, the best builders, many like non-crypto folks we're coming in and we're building really exciting applications on Solana. So Step-in was an example, like move and earn. And the key was that you really did have to have low fees because there was like a high number of transactions happening. You had to have high throughput. It couldn't spike. And you were kind of like earning money in small increments, for walking and then writing that information to the blockchain and interacting with it. Did work on the Ethereum L1. That would work today on Base and some of the Ethereum L2s. But at the time, the best builders who wanted high performance, many of the best builders who wanted high performance on high transaction apps and products were building on Solana. It was just obvious. So I mentioned photo finish, like Zed Run, part of why it didn't work. It wasn't, it wasn't on Solana. And so a lot of the people who had been, in NFTs and Web3 and gaming started moving over to that chain. And there was kind of like an NFT run on Solana. And again, you saw a lot of this on-chain gaming. And then what happened is really fantastic infrastructure was built. So the best product teams we've seen, Phantom, I still think has built the best on-chain, the best wallet. Magic Eden, I believe, has built the best NFT exchange experience, which they've obviously broadened out to many other things. That's a portfolio company, so full disclosure, I'm extremely biased there. I mentioned Step-in, created the sort of move and earn category or the X to earn category, along with Axie Infinity, who did it for gaming. And then there were a bunch of others, but the point is, you had the best founders there. And it was, I wouldn't say it was easier to build there. It's definitely a challenging place. Like not as many people know, the programming language, not as people know how to work with the SVM. The block explorers still aren't as good as they are in other ecosystems. Things are getting better. But the point is the user experience was fantastic. Like I could use Phantom, I could use Magic Eden. So anyway, I discovered it as a user. That was it. And also DeFi, remember in the SBF days, I mean, obviously they were pumping a ton of money through it. Like Solana doesn't happen without SBF. We can absolutely admit that, because he was pushing so much volume through these tokens, through DeFi. Many of the DeFi metrics on Solana haven't reached the levels that they reached in that 21, early 22 era. But anyway, because he was sort of stimulating that Solana economy, because so many great builders were there, just an incredible amount of activity, and people experience just what it's like to not have to do multiple approvals every time you want to do a transaction, not to have to bridge assets between different L2s, you name it, right? It was just a better experience, and that attracted great developers. All right, then we find out late 2022, SBF, there's a massive fraud at FTX. Okay, price of Solana drops from above $250 to $8. What was fascinating to me was that this much smaller community. By that point, we'd made, I think, 15 to 20 Solana investments, ecosystem investments. Hadn't invested in the token itself yet as a fund. But there were jokes that there were only 75 Solana developers left. What's true is there was actually many more than that. And everybody sort of banded together and really, it may have not looked like it, but it was very positive. So the entire ecosystem was like, hey, there's good bones here. Yes, SBF's gone now. Like that fake, steroid money is gone and usage is gone. But like the root, like the actual chain itself has incredible potential. It's worked at pretty high throughput. The median fees have remained pretty similar, even if priority fees have gone up at times if people want to include a transaction. So there's something good here. Obviously, we were still in that era of the chain going down every once in a while. I laugh about it. I probably shouldn't, but it feels like Solana's past that. But the good builders stayed around. People believed in it. And there was the good thing is, Solana gets criticized, I think, at times for being a quote unquote VC chain. But one of the reasons it survived is that there were a bunch of VCs who knew the ecosystem deeply. We were one of them, saw the great builders. And so it was pretty easy to like jumpstart it once the dust settled. All right. There was capital there. There was capital committed. There was capital at risk already. Folks like Multicoin and others, and Foundation and many others owned a lot of Sol. They were down, and they knew there was a really valuable network here. Where if like we continue to invest in applications, this ecosystem is going to thrive again. And that happened through 2023, 2024, into where it is today. And I think what's kind of interesting is if you told me in late 2022 that 70% or more of the transaction activity was going to be in something called meme coins, I wouldn't have believed it. I wouldn't have had the vision to know this is what it would look like. But that's all, that activity has had a knock-on effect on Solana DeFi, on Solana stability, because everybody's had to level up to support that activity. It's made the ecosystem healthier and better, such that new, longer to develop use cases are starting to emerge in Solana. Things like DePIN, pretty much all the biggest and best DePIN projects are built on Solana. You're starting to see a renaissance in Solana DeFi. I think stablecoin issuance is up like 100% or more in 2025, and you see a lot of big institutions building on it. And just to wrap this up, I know it's really long-winded. I believe, and I think the evidence is that you're seeing on Solana is that having an entire ecosystem from sort of fun to serious to party and business in the front, party in the back, to have a full economy on the same base layer with the same tools that I can interact with, from a wallet to exchanges, etc. I think is really, really important. You need that economy for people to stick around and to keep their money and to spend in it. So that's what we're starting to see, or that's what we've seen in Solana.
What do you make of what's going on right now in crypto? So you've seen Bitcoin dominance go up towards 70%, or it's on its way, it feels like, and people are really bullish on Bitcoin. And then you see stablecoins. Everyone's really bullish on stablecoins. But there is this kind of narrative coming through that stablecoins might actually be a bit of a threat to the rest of crypto now, or at least threat to one of the use cases of crypto, which is kind of as a currency rather than just a gas token or just a network token, let's say. Often you see lots of the major apps now allowing you to pay for things in stables rather than even the native gas token, or like that's done in the back. And there's been a lot of this talk about that's a threat to things like Solana, ETH, some of these other L1s. What do you make of that? What do you do you think we're going to still see these emerging needs for the L1 tokens themselves, or do you think that this is now a bit of a worry?
Yeah, so at the highest level, if the number of transactions on these networks increases by many orders of magnitude, if Solana reaches its vision, for example, of being, the home of internet financial markets, and by the way, this is the same kind of bull case that Ethereum folks will tell you about the Ethereum L1. If L2 transactions scale by many, many orders of magnitude, like if the entire world goes on chain, the L1 tokens should have value, because there will be people willing to pay a price to basically be included in a given block at the front of the block and conduct a transaction, right? So there will be MAV and Rev, and there will be transaction fees that in the long run could or should accrue to the L1 token. But if you're just modeling that out today and like the actual accrual, like there's no justification on like present cash flows for the current value of Ethereum or the current value of Sol, which is why you hear, for example, Ethereum supporters where you're not seeing an increase in overall fees, where you're seeing an argument towards, well, it's a money, there is a monetary premium, which is the argument that Bitcoiners have been talking about for a long time. So you're going to need a whole bunch of on-chain usage to justify L1 token prices. I do think that can happen. And Multicoin wrote a good piece that I'd recommend folks read on underwriting Solana on its next leg up from whatever it is today, $80 billion in value to $1 trillion in value, a 10x or more. But again, it's going to take a lot more on-chain activity. I think the more interesting question is whether all these app tokens are necessary, and most of them aren't, and whether many of these infra tokens are necessary, and whether they're at all close to fair valued. And the answer is probably not. So I think you'll see payment and stable coins basically, like we were just talking about DePIN, like one big category where it's unclear that once you get past the bootstrapping of supply in a DePIN network like Helium or HiveMapper or some of these other ones, it's unclear that there's real demand for the token unless it does something. And I'm not sure that buying back and burning the token is sufficient value. So then what? All right, the tokens burn, so you have less supply of something that's still not particularly valuable. What we've had a hard time getting projects to do based on the legal and regulatory status, particularly in the United States, and super hopeful that we get a market structure bill. It's literally starting to be discussed this week. It's pretty contentious, but we're going to need tokens to have some properties that look a little bit more equity like fee accruals. Like some DeFi tokens have this today. Tokens like Maker, tokens like Aave, like Uniswap should be putting on the fee switch soon. At that point, you can start to value some of these tokens in an equity-like manner. And hey, they have fee accrual, they have governance, so they give you some say in the network, and they might have other functions like economic security and things like that. But I think a lot of tokens won't need to exist. And then the question is, if all these like sub tokens don't need to exist, if like on top of Solana, you just have primarily stable coins and then some smaller selection of really valuable tokens, like a handful of memes, or maybe more than a handful of memes, then a handful of like equity and productive tokens, and then just stable coins, but you don't have so many quote unquote shit coins or useless, kind of like VC coins. Does that then lead to, again, more moneyness? Like some people might prefer to transact in Sol because, like I said, you're expecting in the long run there's going to be more transactions on these networks that holders of Sol will benefit from that, through revenue fee accrual, through staking it, and earning staking rewards from the validators that they delegate to. People might start to use it more and more like money. And it's clear, for example, again, during the NFT craze, now during the meme coin craze, that a big portion of the on-chain economy is priced in the native chain's money. And so, but the problem is there's just too many of these tokens right now. And I think, particularly for ETH, it's pulling away attention from, the main token, the fact that every L2 has its own.
Do you think there's a risk that Solana can get displaced by something like Sui and all this other stuff? I know like their on-chain activity metrics don't even compare to Sol, but I kind of also just remember like everyone being an ETH maxi, and then suddenly Solana comes and everyone just writes it off as zero probability, and the next thing you know, it's just kind of like killed it basically. Yeah, I agree with you. Part of the problem with ETH is there's so many things that take the focus away from mainnet, the actual ETH token itself, but the other part of the problem is the casino moved from NFTs on Ethereum to meme coins on Solana. And is there a risk that the next casino perhaps isn't on Solana? And how much of like the whole Solana mindshare thing do you think is due to like the meme coin casino versus like the other stuff that's actually happening on everything?
So we have to like not repeat, and I want to be crystal clear, 600 Ventures invests in the Ethereum ecosystem very heavily, as well as in generalized projects that work across Ethereum, L2s, and Solana, and Sui. But yes, so to answer your question, like let's be honest with ourselves, there's like there's a few million people, right, like transacting on chain in any given day or like week. Like not that many people are using these chains in the grand scheme of things. They're aware of crypto, but like they're aware of it in the sense that they hold, ADA, Cardano, they hold XRP, they hold some Bitcoin, Solana, and ETH maybe, and then a few meme coins, call it like Doge and Sheeb and maybe Bonk, my favorite. But the point is, nobody is thinking about Solana outside of like our group of highly on-chain folks. And so all they care about is like, what's the best experience? Am I, making money? Am I getting like famous or prominent? And right now it's mainly am I making money? Okay. So basically, Ethereum NFTs were fairly limited, expensive form factor. Solana meme coins, like they can move at higher velocity. They're a little easier to use. Like I believe Sui has things like where you can almost like run entire mini programs like inside of individual transactions. Like there are some advances in Sui's technology that I think could work for certain use cases, like things like gaming or having like more dynamic and expressive NFTs. And so if there's it only takes a couple breakout use cases and user experiences for a lot of activity to migrate, given how small the ecosystems are today, to new chains. And I do think, I'm just using Sui as an example, there are probably going to be others, but I do think many developers say it's easier to develop and program and move. the chain is highly performant. It's been around now for a while. There are trade-offs, big time trade-offs in terms of like, security, censorship resistant, all those things. But what we've found over the past couple of years is that the end user for many of the use cases, like low value, high volume transactions, doesn't really care as much about those things. So I think if Solana ecosystem got complacent, if the Solana core devs, Solana Labs got complacent, didn't continue to improve throughput, didn't continue to improve value accrual to the token, didn't continue to make it easier to program in Rust for Solana, don't improve the block explorer and tooling and stuff, that unquestionably the next generation of apps, particularly as we get abstraction where you can sign up for a crypto wallet, like using Privy and other tools with just your email address or Google login, there's definitely a world where another chain could take over. It could also be an alt EVM chain, a chain like Monad, which is really, really high performance in testnet. And if they can transition that through to mainnet and bring some people over, their chain is compatible with all the existing Ethereum tooling. So it's not going to be a winner take all.
Yeah, that makes sense. Just to interrupt one quick thing, our producer's telling me the code is Plinko for the raffle later. And he's going to send restream links to the winners from last week. Hopefully you're still listening to come up on stage with us later. But code Plinko for the raffle bot. Anyway, back to the show here.
And I actually make one other quick point. So the other thing that's happening a lot is the app chains, and I think that's the other thing that you have to watch out for if you're considering L1 value. Like you see Hyperliquid launches with an incredible application, and it's like a perfect fit for people. Don't have a token for a year. People are using Hyperliquid as a perps DEX for a long period of time. They love it. There's great liquidity. It's just a fantastic product. And now they're launching their own chain. They've proven, that it's optimized for, a certain set of financial use cases. So I think you'll start to see some fragmentation there. And there are questions as to, again, as those app chains become powerful, as those tokens have mechanisms. I know it's just buyback and burn today. There may be others in the long run. Again, that could be value destructive for some of the L1 tokens if that trend continues and if there are other verticalized breakout killer apps.
Yeah, that makes sense. I think I wanted to pivot a little bit too, because I know a lot of people who listen, and myself and everybody likes to do a little bit of their own angel investing. So it'd be nice to hear from a VP crypto perspective on how you kind of diligence projects and how you find things. I mean, especially when, as you just said, a lot of these tokens are like the exit liquidity in a sense for when you make these checks. And a lot of them are kind of useless and probably worthless. So like from a top down high level, do you have an approach there that you could share with the viewers on how you approach things?
Yeah. So at the highest level, we have categories that we think will, be of large value and much larger value in the future than they are today. Okay. Those categories are things like, DeFi. So like on-chain money markets, borrow lend, perps, trading, like you name it. Okay. Things like stablecoin and payments. We also invest in equity in addition to tokens, unlike the average retail investor in crypto who just invests in tokens. But the average angel will invest in equity and tokens. It's hard today to get stablecoin exposure, for example, as a token investor. I do think Athena might be a way to do that. And there are others in the long run. We invest in something called Plasma, which will be a stablecoin, basically a stablecoin focused blockchain. So there will be more ways to get exposure through tokens. So anyway, but back to what I'm saying, the categories though really matter. And, are they big categories in the real world? Is there a reason for them to shift to, including blockchains in their flows? And then, will they grow in the future? So another big one is DePIN that we've talked about. So they're taking big centralized industries and, where large tech companies or other entities, are making it really expensive for people to get something. So in the case of mapping, for example, it's really expensive to have access to the Google Maps API, and you're either priced out or you can't get access to the data you need. So having a distributed network of people mapping the world makes sense. So we're looking at does this make sense to be on a blockchain? Is there a reason for it? And then can value accrue, to that distributed, call it business or network? So we start within categories, and we're less of a firm that there are some firms that are really, really like have really big teams, and they're literally just out there reaching out to every single company that they see in these categories through, vast databases. You can increasingly, search pretty easily, using different techniques and databases, in your own like LLMs and AI prompts to find these. And then you reach out to as many, or you could be like deeply thesis driven and say like, within these 5 to 7 categories, I'm going to invest in 2 or 3 companies a year, and I'm just going to like start top down and get to them. We're more of the mind of like, we're going to start with these categories, and I just told you a couple of them. The others are like, speculation and trading, gaming, and so we have a few others. So what we do is we're more opportunistic within those categories, and we're just trying to generally build out our network over time, project out our ideas, who we are, what we invest in, our existing portfolio, and then try to get folks to map into reaching out to us, getting introductions to us, or meeting them, by being present in the market. And we have we have a team. I'm not an engineer. We have multiple engineers in the team. Like, we reach out in different ways, right? Well, like some of the folks go the developer route. I tend to go, whoever kind of like sees me and gets to know me. We also put out, you want there to be a good match, you'll waste a tremendous amount of time. So we're primarily investing at the app layer. So if you come and pitch me like the next L2 or privacy chain, like, we're probably not going to invest. It's not a good use of your time or my time. And then to the ultimate question, once you're starting the diligence, it's a really, it's really intense, and the stakes are very high to diligence in crypto, right? There's higher incidence of fraud, higher incidence of like pseudonymous folks, which again, these are both, so the pseudonymous thing can be both a feature and a bug, right? Like, it's not by default bad. It's just harder to diligence in a way that you need to. We're registered investment advisors. So we have like a deep fiduciary responsibility, and we're SEC regulated. So we have to diligence pretty heavily. We're investing globally. So we do have to run like background checks on folks. So the advice to your audience is, if you're not a VC, I do think there's a lot of scenarios in which it's less risky if you're investing into deals, projects, companies where a tier 1 VC is doing the level of diligence that they're required to do to get comfortable. Because we can talk about whether VCs are valuable. We can talk about all the mechanics of how these tokens eventually get out to the market and listed on exchanges and things like that, and the price they become available to retail. But if you're talking about angel investing, I think VC signal is good because we're doing diligence. We have deep thesis. We have good networks, and we're probably. I mean, we've done just a couple deals this year, and we've looked at we've looked seriously at well over 100. Probably a couple hundred. So, the funnel to get a check from us, and by the way, we still get it wrong all the time. That's the business here. We're doing really early stage, high risk, trying to project what people are going to be doing in a couple of years, in many cases. But yeah, it's not for the faint of heart. I think there's some other good things that are happening. I'm an investor in Legion. There's Echo, which is Kobe's platform. There's some good platforms that I think are starting to vet, where you have deal leads that are vetting deals and then presenting them to other folks. I think that's another healthy channel. And Mark, but it's really hard. The good thing though about crypto and about angel investing, I would recommend to everybody, don't just like, you either do like 15 to 20 angel investments or do none, and size your bets, size your investments accordingly. But you need a portfolio to be successful. Like, it's not like the guy, Jason Calacanis, when he's talking about his Uber investment. It's not like that's not the only investment he ever made as an angel, right? Like, 9 out of 10 return just your money or less, right? Or 8 out of 10 return just your money or less. 1 out of 10 returns a couple multiples, and then typically, it's actually true. One killer one returns just an ungodly amount of money, and that's by the way true not only of angels but also of VCs, and it's true in our funds. Our first fund, Step In and Magic Eden, will return multiples, many multiples, versus the average investment. In our current fund, Pumped Out Fund will return ungodly multiples relative to our average investment.
What and this maybe is putting more of a founder hat on. What would you say is the number one thing you see from people who are failing as founders?
Yeah, so genuinely just there's not product market fit. I mean, it's that simple, right? There's it but to drill into that a little bit more, they're not the failure, and when I say failure, not having like really big scale success, is that there's not one killer thing that you're offering that people want, right? You only need one killer thing. Like OpenSea, it was just like the best interface originally for like trading NFTs. Phantom was just the absolute best killer wallet. You see it with Pump. It was just the ability to launch tokens that wouldn't, immediately rug, like send people, a bunch of money, and then they might launch a token a few days later and not steal your money. Like they did locked liquidity, a bonding curve, and like every token that graduated actually did get out with some liquidity. Do one thing like deeply right, and what's happened, Jupiter as like an aggregator of different dexes, but it was like these products are so much better. You have to find that one thing. What you often see with the like not pure failures, but like the ones that kind of go like this, is there's just no killer feature that attracts people to it. And so you kind of like just dick around for a couple years as it's fine, it's okay, I could do this as a lifestyle business. But especially if I've issued a token, doing something as a lifestyle business with a token, the stakes are so high here. It's so much pressure to deal with people who are like harassing you about your token price performance and day in and day out. Like the community, it's a tough thing that comes with job. It's a blessing and a curse. But yeah, if you don't have something wildly like at least one thing that people are dying to do, Uniswap, like I'm just going to swap, dead simple. You're going to go out, and that's why you see so many things just like really peter out quickly. Like a lot of like the Me Too pump clones, a lot of the AI coins that just like the attention spans are so low because they just don't need to exist, don't have a killer feature that people love.
That's a good answer. We're trying to make YEET successful, trying to make Rekt successful. Yeah, I think having that one interactive point, I think is
and then stick with it, and like really just stick with and be. So if you do have a community, which a lot of these do, and even DeFi products have like really communities of people providing liquidity and things like that, like just stick on the mission. Like with Rekt, like you stick with the brand. With YEET, stick with the brand, the true north for years. With Links DAO, we've been really successful when we've stuck with the brand, buying a golf course, including the community and buying the golf course. We've been less successful when we've done things like launching a community token, which I think over the time maybe we can do successfully. Things like trying to offer a non-crypto subscription package. When you sort of veer off the mandate a little bit, it can kind of like confuse folks a lot. You really do have to be focused in crypto and consistent, with your brand and what you're offering and getting buy-in from folks.
Yeah, that makes sense. Community is everything around here for sure. Mike, what do you think? Are we going to be able to do this raffle properly today, or Mike Mando? Sorry.
I would probably give it a bit more time. Maybe we'll do the final question and then we'll wrap it up with like 8 minutes to go.
Yeah, I'll jump off before your raffle. So you just let me know.
Oh, you don't want to witness that? It was beautiful last week.
I love it.
It was a shit show. We had to cancel it. Yeah. Anyway, I guess we're kind of getting the final questions here, so we'll wrap it up with. We'd like to get a little bit of advice how not to get wrecked. What's your best advice there?
Yeah, so I think getting back to like the title, I think of the stream, could Bitcoin hit all-time highs this summer? So one way not to get wrecked is this, classic believe in something. There are some things, and then if you believe in it and you're going to participate in these crazy volatile markets, but over the long arc of time, this asset class and the leaders in this asset class have increased and appreciated tremendously in value, like Bitcoin has over 15 years, Ethereum has over a decade, Solana, again, a lot of bumps and curves. It's not linear, but has increased in value. Just believe in it, and you have to hold. So I'm speaking to a non-trader, sorry, but just if you're like, but believe in a handful of names and have the bulk of your capital there, and then use the chains as the next one. But again, for the vast majority of how you're using them, so if you're using DeFi, use the tried and true and hardened protocols, right? Use the Aves, use the Caminos, and then I would say keep the speculation. I know it's easy for me to say, like given I'm a little older. I've been in the space a long time and had a career before this and have some capital. And a lot of folks are starting with very little capital and trying to grow it. But if I'm being honest, my crypto wealth primarily accrued over a very long period of time. I bought my first Bitcoin in 2013. So it did accrue over many, many years. And I was patient and I held that Bitcoin. Okay. It didn't go anywhere until like 2017, basically. From my original person in 2013, but I believed in it. If you don't believe in things here, like you probably shouldn't be doing it, you know? And by the way, I think it's okay to believe in things that other people laugh at. I think having fun with meme coins and having an edge and spotting them and having fun, some small segment of people are really good at that, but not everybody. So I think don't get too caught up in pure gambling, but also don't be afraid to have fun. Don't be afraid. Like a lot of our investments are in things like that are gambling and speculation and trading. And honestly, that's a big part of humanity is having fun. If you do that with the right sizing, again, it allows you not to get wrecked overall on the totality of your portfolio. So I've been fortunate enough to have core positions like Bitcoin, Solana I've held for a very long time, that I've done things on chain and again maintained those on chain positions. And then don't overreact when you get wrecked. Like I was just involved in a protocol where I won't name it, but it was public, like where I deposited some capital, the protocol got hacked. That happens, right? You're going to have some losses alongside your wins, but don't like wildly overreact to those and just pull out. Those are the people who don't tend to succeed.
Yeah, I think that's good advice. You really do have to believe in something and let stuff marinate a little bit. People that jump around constantly, I mean, next flavor of the week, that's not how you build real wealth at all.
Find people you feel comfortable with sharing, discussing, getting feedback, getting joked with of your ideas. Don't just go copy trade the person whose motivations that you don't understand and really know on Twitter, or wherever, who, might not actually be putting on the trades and doing the things that they say they're doing. And by the time they're telling you about it, they're actually on their way out of them.
Perfect. Okay. So what are we thinking by Mando about this raffle here?
Let's see what it goes.
I guess thank you, Dudas.
Thank you, guys.
We'll have a great year with the crew.
Have a great raffle. All right.
Well, OSF, his charger died apparently, and he forgot it. I don't know. So thank you, OSF. Yeah. Thanks, Mike Dudas. Thanks for coming on. It was an informational episode. I loved it. So hopefully we'll see you again soon. Let's get to this raffle.
Okay.
Just me and you, buddy, and my kid's going nuts. So I don't know. I mean, like I gotta
go nuts. The lights are off.
Do it solo?
Not really. OSF just made up a reason why he's not on the show.
Fuck, dude. He was just eating noodles and shit. Like, what the hell was that?
One of the most wild Rekt Radio episodes ever. You're in the dark, and OSF is eating noodles for the first time.
I mean, mine's just a little contrast from the nice Florida sun, but he was eating noodles and rugged us with a fake charger excuse. Is wild behavior from OSF as usual. Anyway,
so intern, I think we have 3 people in the studio, right? That's how we're gonna do it this week. Oh wow, we do. Look at this. OMB Gaming Invest. 2 people in the studio then. Or is there a third? And are we able to share our screen with this? I think we are, right? So intern, I think let's play Plinko then. Or we can do a lamb chop. What do you think? Plinko, I think, is the easiest. So we're going to run high volatility Plinko. Wow. Firefly's mic is not working. Oh, I can skip them. All right. Well, I think if you do lower volatility, we'll be able to do this easier. I think.
Do medium or what?
Yeah, do low then. Do low. I think that's the only way you can. Yeah, now you can do it. Okay. Do you want to do 1 ball? Or do you want to do 3 500 balls?
What do the people up here think?
Yeah, how risky should we do it?
Well, I can't hear anyone.
Yeah.
Just do 3 500.
Let's go 3.
Do 3 500 balls for each
3 500 balls. We'll do
OMB
first. Then we'll do Gaming Invest. All right.
And then we have a raffle. We have a person coming up, or what?
We're gonna hopefully bring up people from the raffle. Yeah, let's go. 3 goes. Okay. This one. This doesn't look good.
What did he win?
That? I think he won 1,100 and less. Yeah, that was like 600.
$600 win. Oh, good shit. Yeah. Gaming Invest, you're up. Drop $3 grand.
Oh, got 3 now. Let's do it again. We need to get some music for Plinko.
I mean, there's sounds. I don't know why we can't hear them, isn't there? Like,
I don't think there's music though, right?
No, you're on music. So what did this guy win? 1,000. That was a little bit more.
Yeah, 1,600. 1,600, I think. Yeah. 1,600.
Firefly, you're up. 3 balls. We got to do something better, a different game, I think, next time, but maybe not.
Yeah, we got to get audio going, or maybe we can actually increase the volatility. Hold on, this one actually might be pretty decent.
Volatility increase would be nice. So that was minus 250. So it's
750.
Yep.
All right, so we just gave away $5 grand. Oh no, that was less, right?
Yeah, like 3K or something. But congrats, you guys won some good loot there. Give intern your YEET names.
YEET names. Yeah, I think we already have them.
Great. So let's get this raffle going. What happened with the raffle?
It's going. We're going to see who won this week. Should we play Lamb Chop for the people that come up for the next one? Or should we play Plinko? Depends if we can get them up on time. All right, so we got 30. Remember, if you want to be on the raffle, we just gave away $3 grand like that. That was pretty quick. You need to come up and you need to bet under the Rekt Radio code. I think it's $1 minimum. We had 38 people, so you got a very high chance of winning here. We're going to select 2 winners, I think, for this. Let's do it. All right, I think he's gonna. Are we bringing them up now? I think we are.
Alberto.
If you're on X, he's gonna DM you the link if you can make it. If not, we'll have you on the next show if you don't make it in time. But
Dr. Forney, there we go. That's a big YEET player right there. I see his name out there. Oh, that's nice. Dr. Forney up here.
Should we just pick another one here actually, and then just have them up on the next show? It feels like that's probably the quickest way of doing this, and then we can actually have them up to play a proper game of Lamb Chop.
Maybe, I don't know.
Maybe that's the way we should do this. We should end it here and then just have them up on the next show. Dr. Pawnee. We could pick one. We could pick one more winner, and then we have 3. We have 3 winners already set up for next week. I think that's the way.
It kind of feels like that might be the way to do it.
That'd be the quickest way to do it.
Next week, and then they'll be ready to come up.
Yeah, then they can come up. So you'll be the winners for next week. We'll send you a link for Rekt Radio. Let's pick one more now.
Yeah. We'll do a week in advance, and we can plan it out better. Good thinking. Congrats those winners. You're going to get next week's plays, and then we'll do next week.
We'll play a more interactive game. We'll play Lamb Chop, I think.
A little more energy. Maybe OSF will be here.
Yeah.
All right. Thanks, everyone.
Thanks, guys.
Reach out to the intern. Yep. Bye.